This is the Scrap Metal and Commodities Recycling Report brought to you by BENLEE Roll-Off and Open-Top Trailers and Raleigh Goldsboro Metal Recycling. Today is Monday, December 7th, 2015. Highlights last week were scrap metal prices had a small uptick, oil prices hit 10-plus year lows, and U.S. manufacturing is in very tough shape. U.S. steel production continues to fall to yet new multi-year lows. Huge steel imports and slowing manufacturing in the U.S. are hitting U.S. steel companies very hard. Steel production is now 20% less than it was the same time last year. Oil prices are now at 10-plus year lows due to an OPEC met last week. They agreed to do nothing to limit drilling. Saudi Arabia continues to use low prices to increase their global market share, and it's working. U.S. oil drilling rigs, major consumers of steel, continued falling, are now about a staggering 1/3 of what they were just 14 months ago. This bad news chart is the Institute of Supplier Management Manufacturing Index that shows U.S. manufacturing has been declining for over a year. With all that bad news for manufacturing, as would be expected, scrap steel prices remained somewhat steady last week at multi-year lows, with no sign of increases coming anytime soon. As for a small positive, we are seeing some stabilization and small increases in ferrous pricing, but not due to increased demand. Prices had a small uptick in some markets due to low prices have dramatically lowered incoming scrap volumes, causing some shortages. Importantly, Vale, the world's largest miner of iron ore, announced after years of production increases of iron ore, next year they will reduce iron ore output, which is part of this stabilization of steel prices. Copper, after hitting new 6-plus year lows 2 weeks ago, came up a bit last week. Importantly though, when looking at this 5-year chart, we see copper is still very much near its 6-plus year lows. Aluminum, like copper, came up a bit last week. But it too, when looking at this 5-year chart, is near its 6-plus year lows. Last week we talked about a large recycling company called Jayco that abruptly closed, and their competitor Arca could actually benefit. Others surely agreed in that Arca's stock price doubled days after our report. We wish them the best of luck in the marketplace. Sadly, last week we read various reports and spoke to multiple scrapyards that are closing or just closed their scrap operations. We also spoke to an executive of a major scrap company that said they too may be closing multiple yards in the near future. The recycling business remains in nothing other than a severe depression. While overall job creation is clearly going well in the United States, last week Volvo Truck announced they are laying off 700 manufacturing people. Related last week, it was announced that orders for Class 8 large tractor-trailer trucks fell a staggering 60% in November from November of last year. On the positive side, last week, Chairwoman of the U.S. Fed, Janet Yellen, testified in Washington. Her testimony included saying that U.S. needed 100,000 jobs to absorb all the new workers. It was then reported that the U.S. created 211,000 new jobs in November, so while as reported, U.S. manufacturing is clearly slowing, the U.S. economy in total is growing. Lastly, we were in New York City last weekend. In my entire life, I have never seen New York City as crowded as it was last Saturday night. The streets were nothing other than jammed. Lower fuel prices and more people working are having a very positive effect on the economy as people travel and spend. With that, we hope all have a safe and profitable week. My name is Greg Brown.